Hey guys, Dr. Tom Carr here of drstoxx.com. drstoxx.com. Hey, I just want to give you a quick reminder before we look at three charts tonight that you've got about 13 days left to sign up for a free trial to any one of our five market letters. 30 days, no risk, won't pay a cent. Sign up for one letter, sign up for all five, or any combination of those, and you're good to go for monthly subscriptions only. If you want to upgrade to the quarterly or the annual, simply shoot me an email and I'll help you do that. Go to our site, drstoxx.com, click the subscribe button, type in free trial, all caps, all one word, into the discount code box, and you're good to go. So let's start by looking at first the S&P 500. We're going to use the ETF proxy for that, the spiders. And if you've been having trouble trend trading or even swing trading this market, I would never normally counsel this, but I'm going to say it now. You can blame the market. Normally, if you're having trouble swing trading or trend trading, it's you that's the problem, not the market. But in this case, you can blame the market because we're in this horrendous tight range market action, and it's of a length in duration that has not been seen since 1959, if you can believe that. This is a very unusual market condition. Now, there's a lot of uncertainty in the market. We can understand why the market is so flat and why it's been so choppy, up one day, down the next, because we're in this horrendous period of political uncertainty as we head into the election next month. We've got rate hike risk going on in the background. You've got all sorts of unrest in the Middle East. You've got commodities going up one day, down the next. It's just been a very strange and unusual time for trading. Now, that's soon to come to an end. It always does. One of the constants about the market is that it's always changing. But all that is to say that it's a very challenging market condition. As you can see here in early part of 2016, we had some really nice long-term trends that developed, both down and up. And that's great sort of trading environment for swing trading and for trend trading. But once we got into this 3-month period of flatness over here in the late July, August, and September, and on into October, it became very much more difficult. Let me drill down to an intraday chart. This is the 2-hour chart of that period of flatness. And as we analyze it, we kind of separate out some of these periods here. We can see that there are, in fact, 5 distinct periods of market churning, if you will. 2 that were on the upside of things, and 3 that were on the downside of things. This first market churning period looked like a nice consolidation of the very huge run that we saw going into it in late June, early July. But then it looked like we were going to get a nice continuation run, but we ended up with another period of churning, and then we had this drop down around the Brexit vote. We had this other little period of churning here in mid-September. It looked like things were going to break out to the upside, but again, we just got these up and down swings, up and down swings, up and down swings. It resolved to the downside just a couple of weeks ago, and it looked to everybody's analysis like we were going to get a sharp downturn heading into the election. And then we get a couple of days here of nice upward movement again. So now we're at the top end of this lower range here, and it looks like we're going to break up through that and get back into this range on the spiders between 214 and 218 or so, which would be a healthy thing for the bulls. But again, this is just very, very difficult trading. Now let me show you a couple of charts that I do like. There is a very nice bullish setup here in oil. And here we have the ETF proxy for oil. This is the 3 times bullish leveraged ETF for the price of crude oil, UWTI. The bearish version of this is DWTI, but you want to buy the UWTI as it breaks out of this nice little bull flag here. You can see this is a chart that has been trending quite nicely, counter to the sort of market choppiness that we've seen. So the price of oil is a decent place for you to find some nice swing trade setups. Prices have been consolidating here as we're heading off to the right edge of the chart. The lows are getting higher, the highs are getting lower. We have these two nice upward movements here. They're both about the same length and duration. The first one did coil into a bullish flag, which I thought was going to break out to the upside, but it did not. It fell through after doing an ABC correction down to the support channel line. We've got a nice thrust off of that on huge volume, which suggests to me that the market is bullish, that the bulls are in control. We have this tight little low volume flag with a lot of bottoming tails here, and that does look like it's going to break out to the upside. Target for this trade, if we do get the breakout, is about 10 points. So you're going to look at getting in at around 28 and riding this to about 38 or so. The other chart I wanted to look at quickly is a chart that we put our subscribers into today. Not that one, this one. This is a chart of the solar company FSLR, First Solar, which is the most fundamentally sound of the solar companies. May not be the most exciting of the solars, but it is. It's got a lot of good profit and some decent valuation as well as huge growth numbers. And it seems to have bottomed out here as it put in what is called an inverted head and shoulders pattern. We've got the left shoulder here, we've got the deep cut head, and then we have the right shoulder, which is shallower than the left shoulder. That's something you want to see. And if we were to overlay an on-balance volume indicator, you would see that there's more bullish volume in the right shoulder than in the left. That's also something you want to see. And today it's trading just a little bit higher than this. It's very close to this 40 period here, so it's very much right at the point of breaking out. This pattern measures, I can't see the numbers exactly here, but it looks like it's about a 6-point spread in the head. So you add that on to 40, you're looking at a target of around 46 on this trade to the upside. So wanted to show you those three charts. God bless everybody. Have a great trading day tomorrow, and we'll see you soon. Bye now.